What's going on, Hot Take Nation? It's DRW here. This week's show is brought to you by Energy Strong, which is a group of over 75,000 individuals committed to the advocacy for domestic natural gas and oil production. Energy Strong was born in the wake of Proposition 112 in Colorado, where in 2018, groups seeking to end domestic production of natural gas and oil initiated Proposition 112 in an effort to cripple the industry in Colorado. The measure was narrowly defeated after significant efforts by industry participants, but the continued opposition to our industry remained evident throughout the state. Dustin Case, Jack Hamlin, and Luke Coates recognized the critical need to unify the industry and their professionals to educate the citizens of Colorado and end the reckless narrative against domestic natural gas and oil development. Since conception, Energy Strong has grown across the natural gas and oil producing states and expands far beyond Colorado. As Energy Strong continues to grow, the mission hopes to confront the misinformed narrative of our local, state, and national levels as the conversation to end domestic production gains traction across all platforms. You can join the Energy Strong community in support of continued development by following Energy Strong on their Facebook page, their LinkedIn page, which as you know I can't see, and by signing up for a free membership at energystrong.com. A calendar of important industry events and opportunities for participation is coming to the website soon, and they invite all supporters of our industry to watch for ways on social media to engage. It's extremely important now more than ever to have your voice heard and to be educated. Speaking of which, their next event, which they're inviting everyone to attend, is a live webinar on Friday, November the 13th from 11 to 12:30 Mountain Time with Alex Epstein, who you know from the Hot Take of the Day podcast, but also from his book, The Moral Case for Fossil Fuels. He's a philosopher who's created an accessible platform that shares the importance and the necessity of fossil fuels in our life. And Energy Strong invites everyone to register through the link on their LinkedIn page, their Facebook page, or through the link at http://go.energystrong.com/Alex-Epstein. And now, on with this week's show. What is going on, Hot Take Nation? It is DRW here for another episode of the Hot Take of the Day podcast. And today we are going back to my roots. We're going back to Calgary. We're going back to the Canadian oil patch where, for me, it all began as a young engineer coming out of school. And so Stacy McDonald, who has a really interesting background, is joining us. So first of all, Stacy, thank you so much for coming on and talking with us today.
No problem. Thanks for having me.
Why don't we start with a little bit about your background? I know you have a very diverse, from sort of the investing side to the operations side to being on boards. Walk us through your background.
Yeah. So my background, by way of born and raised Calgary, which is a little bit rare. A lot of people are transplants to Calgary, like my parents were. My dad and my mom. Well, my dad was actually an immigrant from England, did chemical engineering in Montreal, and then fled Quebec in the late 70s and magically got a job with Amoco in Drayton Valley, of all places, which I think was like a dirt roads scenario back then. Now, kind of known for a cardium area. Anyway, ended up in Calgary, had me. My mom's the CFO and my dad's a chemical engineer. So I grew up in the energy business, but I knew I didn't want to do either of those two things. I wasn't cut out for it to go to engineering school or accounting. So ended up going into finance, and I had some, kind of mentors in the industry that knew my dad because my dad was a client. And I knew I wanted to get into the finance side of the energy business. So graduated from University of Alberta in 2005. And basically, it was kind of like dream time in Calgary, multi-year bull market rally, jobs everywhere, oil sands, steel mania. And I kind of came out of school and landed into that. I ended up in a dealer called G&P Securities, which was kind of one of the big independent dealers in Canada. We have, the kind of the big chartered banks, and then a handful of independent dealers like Peters & Co., G&P, First Energy at the time. And, I didn't know what was going on. I was basically making pie charts and doing as I was told. And I had a really great mentor at the time, Dan Tabucci, who was the head of research at GMP and one of the early founders. And at the time, it was being run out of Toronto, and our Calgary office was run by a guy named Tom Budd, who was really famous in Calgary for being, kind of a bit of a rainmaker at the time, and, paid my dues. I became a publishing analyst, I think, when I was 26 years old, which was obviously fairly young, but I think somewhat reflective of the fact that, it was just kind of, there was so much business going on at the time.
Yeah.
So I was really lucky to land at a firm that didn't care that I was the 25-year-old or 26-year-old female. They gave me a chance. And I was there for, I think, overall about 13 years. So I ended up as the managing director of institutional.
So let's chat about that for a sec before we go on to what you've been doing, because 2005 was a really interesting time in Calgary. Obviously, as you said, you could get a job anywhere. This was just before I had started with Anadarko in 2000. And was there until 2006 when I got transferred down to the Denver office when we bought Kerr McGee and Western Gas. And I mean, I remember and no one can truly appreciate, maybe some people in Houston or Midland, but the Stampede parties and it was incredible. It was like the city was booming, downtown was crazy. You could get a new job at any company across the street. The difference with the Canadian model, obviously, was that everything was a junior public. That was the exit. Whereas in the US, everything was a private equity firm. But you built it, you grew it as fast as humanly possible, you sold to an independent, and that was the model. And coming into 2008 with the financial crisis, oil was the only thing that was working, and the whole development. So when you think about the learnings you had from 2005 to 2017, 18, what was the best thing you got out of it, do you think, that you've been using today?
Obviously, compared to where we are now, just how important that, equity flows into the space really are, in terms of how that translates into obviously capital spending and employment. I'm sure we'll touch on this later, the difference between what's happening in the US and Canada over the since 2014. But when you see how much capital is flowing, and I mean terrible companies were getting bought deal letters every single day, just the amount of deal flow, use of proceeds, equity financing is every day. And to see that just completely shut off, that's what I really learned at the time is, the companies now that are left over without access to capital are really so much better run than they were in 2005.
Right.
It's not even complete idiots could run companies back there with terrible assets. You used to write about things like, the success rate in the quarter, because we used to talk about dry holes. We don't even talk about that anymore because of resource plays, but there were companies that had a 50% chance of success in a quarter on what they were drilling, and they could still raise money every day.
Yeah, it was crazy. And so some of the pushback you get from the current, and I know that you're familiar with the energy Twitter universe. And a lot of guys sort of say shale ruined the model and we should just go back to conventional. But I remember having my career start around the same time yours did, 2000 to 2005. I mean, we were literally drilling bumps in Northeast BC for Slave Point gas on top of a water drive with ice bridges and helicopters. And you'd expect that 3 of the 8 wells you drilled that winter were going to work. And then you couldn't access them until the next ice bridge the next year. It wasn't a great business. And as a result, F&Ds were going up. We were still getting money, but shale in the U.S. totally changed everything, just like oil sands really changed everything in Canada. How do you think about the conventional business? Let's talk about in North America, but also Canada specifically. Do you think that there's a chance that the conventional business comes back, or do you agree with me that the conventional business was played out in $30 oil, and now there's really only oil sands and shale? Where do you come on that?
I don't think the conventional business is coming back. I can see the attraction of PDP and low decline and perhaps using, current technologies on what you think are conventional plays. But old school vertical drilling off seismic squiggles, is that going to be happening again? No. Like, are we going to be drilling? I think it's highly unlikely. Some conventional still makes a lot of sense. One of the best plays would be what is still drilled would be the Southeast Saskatchewan, Mississippian conventional, which basically is still horizontal drilling. It's just not fracked.
Yeah,
So
the old acid wash, the multilateral acid wash.
And those wells are amazing, right? They're super cheap. They pay out really fast. And that stuff, that bread and butter in Saskatchewan's great. But, we're not going to be drilling, like you said, like big structures.
How do you think about the Montney now? When people talk about like the evolution of the Canadian business, obviously, I started my career in Southeast Saskatchewan, and I remember drilling these three-legged multilateral acid wash, and there was the Weyburn CO2 flood, and then I moved over to the Tabor asset in Tabor, Alberta, where it was all water floods and CO2 pilots, and all the wells were drilled, and it was just a grind. I worked up through Grand Prairie, and at the time, sort of the stacked vertical gas play was the whole thing. And then the Montney was sort of emerging as I left. Where's the status of the Montney play right now, in your opinion? And is it all that it's cracked up to be in the context of declining associated gas in the U.S.? Does that help the Canadian market, and does it give a resurgence, or where do you fall on the Montney play?
I obviously am biased because Birchcliff is a Montney producer, but I've looked at, I've done commercial assessments of a lot of places in North America, and the Montney continues to get better every single year. And we're like in year 15, well, longer probably. Verticals, horizontals beyond that, and the play gets better every single year, and the aerial extension plays. So, I think the Montney is probably, the top play in North America. I continue to believe that. And I think what you'll see, or what we've seen over the last few years, is a terrible restrictive capital environment in Canada, and the Montney is still doing pretty well. So it's held up.
So yeah, and so this was the comment that you talked about from your investment banking career, was if you don't have access to capital, and if capital flows aren't there, you obviously can't develop the play anywhere near the extent that you want to. And then there's this discussion on the other side coming from Europe and from Canada, this ESG. If we only had better ESG, if we had more, we'll talk deep about it. But is that what brings capital back? Is it returns that bring capital back? As you look at your company, and you're on the board of directors of Birchcliff, is that correct?
Correct.
And so when you think about, without non-public, but as you think about that company and those types of companies, what really does it take to get capital back in the space to accelerate the development of what you think is the best play in North America?
A lot of oil and gas executives don't want to hear this, but one of the main reason their stock prices are down is they didn't have good returns. They didn't justify allocating incremental capital to. When you look at every sector, when you're competing against technology, and in Canada, even cannabis, the energy investments, they were not good steward of capital for the most part. And what's changed in Canada, I think, in the last 5 years, and this is what I think is going to end up happening in the US, is because of that lack of access to capital, it was so disruptive to the industry that it forced all of the producers, the good ones, the surviving ones, to recalibrate their business. And it put such a level of discipline on them now that weren't there even when prices were higher. And I think that's ultimately what's going to have to happen in the US as well. Now, in terms of getting back to like sector top or peak valuations in terms of multiples, the industry can do their part about managing their business properly, but ultimately a lot of that's going to come down to, the macro picture and equity flows into the sector, which probably means they're going to have to come out of other top performing sectors like technology. So, when I look at the industry, we can only manage our businesses. We can't manage our share prices. And the executives need to work on managing their businesses first and not worrying about their share prices.
Right. So the U.S. election just happened, and as of the recording, we still don't know who's going to win. But there's a big difference between the Democratic Party and the Republican Party in terms of pushing the Green New Deal. Now, in Canada, under Justin Trudeau, I would say the environmental restrictions and the environmentalism of that country has really pushed anti-fossil fuel for a number of years now. How has it been? How has the industry responded? What do you think that if Biden is to be elected, which it looks like as of this recording he's going to be, what do you think happens to U.S. producers in the Canadian experience? And what advice would you give executives south of the border as to what they're going to have to deal with the change in government?
The way I try to think about ESG and various initiatives, whether it's, governance or emissions or just general environmental concerns, is they're always going to get more stringent over time. The US might look to Canada, but Canada ends up looking to Europe to see what these trends are. So, the US, you can push back on things like, methane regulations or flaring. It may not happen right away, but over time, those restrictions are going to happen in the US, like they've happened in Canada. So, for example, in Canada with flaring, if you drill an oil well that has associated gas, like the government wants you to do inline tests. They don't want you to flare the gas even during the test. Now, if you have to flare during the test, you're allowed to do that. But it only ends up being for effectively a couple days. You can't just flare your gas forever. That doesn't make any sense. So those are the type of things that have happened in Canada that are going to have to happen in the U.S. And obviously there's a whole dynamic with the Railroad Commission and what the producers want to do on their own and the infrastructure companies. So I don't know ultimately when that shakes out in the U.S., but it's going to happen at some point. And I think the producers need to decide, is the cost of inaction going to be more down the road? And are we getting a bit smart and do some of this voluntarily now? And I think you've seen a few companies that people diving back. We started talking about flaring. So it's happening. And, my advice would be just to get on with it, just to get going if you're not doing this stuff voluntarily already.
Yeah, it was crazy to me, especially with COVID, and that it just happened to overlay that the Railroad Commission in Texas was sort of hearing the flaring at the same time as COVID hit. And the easiest thing for the industry to have done that would have had such a positive impact was to say, we're going to shut down flaring because we know that it's wrong. And the net effect of that was they would have shut in the 2 million barrels of brand new wells that they hadn't built infrastructure for, which meant they would have preserved all that flush production for when oil prices were back in the summer. But instead they didn't. They kept all their wells on. They were trying to stave off bankruptcy. And because it took 45 days for the whole industry to respond, oil went to negative prices. I mean, sitting on the Canadian side of the border watching that debacle, you must have just been scratching your head.
Well, we did a voluntary curtailment in Alberta, right?
Right. It was like 300,000 barrels, if I remember correctly.
Yeah, it's been staged, and now I think they're editing it, but, volumes are still shut in from a few projects anyway because of COVID. But, I think the key difference when you think about the Texas market versus Alberta is in Alberta, the royalties are owned by the Crown, by the government. So the federal or the provincial government has a responsibility to try to get as much value for our citizens as possible. And so they have I'm uncomfortable even talking about curtailment because I believe in free enterprise. But from the Alberta government perspective, I understand because they don't want to have these reserves blown out at effectively a 0% royalty rate because it's on a sliding scale. Now in the US, when I contrast that, you've got mineral owners. It's a completely different dynamic than you have in Alberta because the Texas Railroad Commission they're not receiving the royalty payments from the mineral rights. So it's just a little bit different dynamic. And there's antitrust concerns and a whole bunch of things, but like the flaring stuff to me isn't going away. It is, in my estimation, a lot more complicated in Texas to figure out just because of the dynamic. In Canada, you typically own your own field level processing and you own your own, gas plant. So it's a lot easier to build, compression and pipes gathering on your own property, where in the US, the dynamic's a little bit different because they don't necessarily own that level of stuff.
So, and it's funny that you mentioned that because I wrote a white paper that ended up getting sort of circulated around in March, and the recommendation for exactly that reason was the companies needed to voluntarily have the RRC regulate flaring because it was the only way like that there would be an incentive. And then the federal government needed to encourage the Gulf of Mexico platforms on federal land, which is about 2 million barrels a day at the time. They could have given a reprieve or a VPP, a future VPP, or some sort of loan structure that would have encouraged the Gulf of Mexico producers to bring 2 million barrels a day off the market. And then with the loan guarantee, the Gulf of Mexico producers wouldn't have needed the cash, which then would have had the benefit of benefit to onshore. And obviously, the world unplayed as it is. Calgary, I grew up in Calgary, went to Western Canada High School, went to the University of Calgary. So in a way, we are competitors being a University of Alberta grad. But Calgary has been in a tough spot since really the 2014 and never really came out of it. I think the U.S. with shale and certainly the Permian, 16, 17, 18 was a bit of a bull market and a bear market overlay. How is Calgary doing now, and are you seeing green shoots? And what's the view of the U.S. election in terms of the impact on the Canadian oil and gas industry?
I often talk about this Permian capital buffer because it was part of the reason that the downturn was so painful in Calgary. But our downturn started in 2014, and we didn't get a reprieve because the capital just left, and we didn't get this Permian mania that happened in the U.S. So what's happened is, we've been through basically layers of job cuts for almost 6 years now. And no, it's extremely painful in Calgary. My view is pre-COVID, come January and February or 2020, which seems like a lifetime ago now, there were actually a lot of green shoots in Canada. I think institutional investors were recognizing the kind of base business fundamental difference between the U.S. producers and Canada, because I've kind of talked about how the Canadian businesses have recalibrated with lower decline rates, etc. And I think Canada was actually going to start getting some incremental capital flows out of the U.S. energy needs into Canada. And then COVID hit, and we're basically back to square one. Now, this is a somewhat controversial view, but my view is that in the long term, COVID's going to be the best thing ever that happened to Alberta. And the reason being, it's going to do to U.S. shale what OPEC couldn't, which was finally get the capital and the insane, uneconomic growth out of the basin.
Right.
Because we're competitors with you, right?
Right. Oh, absolutely. Which brings me to the Keystone Pipeline, because Keystone is a big topic of controversy, certainly in Canada. I mean, beyond even being able to export through BC and the impact of some of the ex-Alberta provinces wanting to restrict and restrain the resource development in Alberta. The Keystone Pipeline is one that just brings up massive controversy. Curious if you have a take on the change in politics down here and the decline of shale, if that has a positive or negative impact on Keystone, and if you see anything sort of on the horizon for that project.
Keystone, it's had like 1 million lives, right? I mean, I don't even know how long we've been talking about this. It died, and then Trump got elected, and it came back again. Now, obviously, for Keystone's success, it would have been a lot better if Trump's reelected, like full stop. I don't think it's 100% a no under Joe Biden. It's kind of announced last week, we started awarding contracts, if it's built. So they've got a bunch of union support lined up. And, in some of these states, like along the road, they're talking about job creation. So they're doing everything they can to try to make an argument that, this should go ahead. These are great, middle class, high paying jobs, and we need your economy needs jobs. But ultimately, we have to see how Joe Biden's going to run, and if it's him, and he's got a lot of people that want to attack the energy industry from the supply side, and so we'll see where he comes. I'm hopeful that he looks at the pipeline, all of the parties that support it, and I hope he allows it. But honestly, we just don't know at this stage.
So you talked about earlier in the interview being a woman in finance energy in Calgary in the heyday in 2005, and you had a really good mentor. I'm curious, over the last 14 years, how much change you've seen in terms of the ability to add diversity, engage the diverse thought, and what changes you've seen in industry, to the good and to the bad, as being a woman in energy?
Energy and some of the more male dominated industries have definitely been behind in terms of, diversity in the executive ranks and then also on boards. That's something we need to work on. I think Calgary really means well. They want to have more women, especially running companies. But I think one of the unfortunate things is, the Calgary model of, build and explore code, sell it in 3 years. And you're constantly flipping these assets and finding new management teams, either area managers or VPs. Because that capital structure is not there anymore, you haven't seen that level of turnover that we would have seen in a normal operating environment. And I think that's really held back from having women run companies because we just haven't had that natural turnover. A lot of executives are they don't want to give up their seats, right?
Yeah, salaries are good at this time of the cycle.
Exactly. So we haven't had the level of increase in female executive leadership that I would have liked to see. And I do think it would have been better without, this 6-year bear market.
Right. So on the mergers and acquisitions piece, I had seen some writing on the Cenovus Husky merger. And it was the first major M&A that I had seen coming out of Canada. Whereas obviously on the US side in the last 2 months, you've seen Chevron Noble, Pioneer Parsley, Conoco Concho, WPX Devon. Like US companies, because of the shale model and the capital intensity, has really pulled companies together. Cenovus Husky was the first one. Really all you saw was American companies selling their Canadian division sort of over the last couple of years. What are you seeing on the M&A front? And what do you think specifically about the Cenovus and Husky deal?
I'm not surprised to see Cenovus and Husky line up. Obviously, Husky tried to buy MEG, which was a standalone SAGD producer, which fell apart, I guess, about a year ago now.
Yeah.
Year and a half, we barely know what day it is.
March 232nd today, I believe, is what it is.
And so there was an awareness in the market that Husky wanted to kind of match up their more refining type assets with a SAGD producer. And there's just only so many dance partners at this point. Like, we just haven't had new companies. So I'm not surprised to see Cenovus pair up with Husky. There's a lot of pressure on industry, like scale makes all the difference and whatnot. And I think that's true. Like, you can't be a micro cap and get institutional investor attention at this point. But, Husky and Cenovus are already pretty sizable companies. So I think for me, looking at the asset, I want to see them. I think whether the deal works or not will be dependent on whether they integrate their actual physical assets. Husky's got a big position in Lloydminster. Cenovus is closer to Cold Lake. Can they physically integrate those assets? Can we talk about blending and condensate? And those are the specific aspects of the deal that really get me excited versus just, we're going to do a share exchange and hope that the combined entity is a little bit better. Like, I actually see physical benefits from this transaction, but it's going to take time to work itself out.
And is this the first of many? The last one that was sizable that I can remember was the surprising move. I believe Conoco bought Celtic, if I remember that deal correctly.
Gone through XTO bought Celtic.
Okay, that was the one.
And Cenovus did a poorly received transaction halfway through our downturn where they bought the Conoco kind of Western Canada assets. Maybe what you're thinking about.
Oh, okay.
No, and then Conoco bought Kelts in the Montney properly.
Kelts. That was no, you're absolutely right. But on
the Montney, like Conoco basically left Western Canada other than Surmont, and they kept a tiny piece of Montney, this property called Blueberry of everything. And, part of it at the time was like, well, why are they keeping this tiny Montney property? And they thought it was so attractive that they ended up doing a major acquisition a couple of years later. And this is what I'm getting back to on the Montney is I think, that's where the M&A is going to come from, the Montney. I think a big part of it. I think other than, whatever happens with Total and Shell in the oil sands, I think most of the actual corporate M&A outside of oil sands is going to be in the Montney.
And so when you look at the landscape there, who are the players that you really feel good about? Maybe not on a valuation standpoint, but just on a size, a scale, like who are the potential acquirers? And then who in that sphere would be the potential acquirees? And do you see U.S. companies like Conoco playing a role where an Exxon, Chevron, Shell do take Canada a lot more seriously with the fall of shale? Where do you fall on those topics?
I want to, so I'll talk about the Montney. The oil sands is a little bit different. I actually think we're going to see about acquisitions there. In terms of the natural gas picture, obviously LNG Canada is going to be coming on stream at some point. I think there'll be some M&A around that because some of the smaller participants may not have enough molecules for their portion. So there may be a little bit of activity around some of the LNG participants being responsible for their own supply. Because frankly, when you look at the valuation in Canada, we're at the point where it's almost cheaper to buy, PDP or 1P reserves from a public company than it is to develop your own. So I think that's going to play a part in it. Further down the road in terms of acquisitions, like Tourmaline's obviously, I think it'll be an acquire at some point, through that or through the new vehicle. Called Topaz. And then on the oil sands, I've been beating this drum for a while, people are going to be negative about shale. There's not a better contrarian take than the fact that oil sands are going to have their day in the sun again here. Because it's pretty much got everything that everyone hates about shale, the oil sands don't have. So
right. Which is Canadian natural. And when I left Canada in 2006, we had ended up selling the beginning piece of Anadarko Canada and also the latter piece of Anadarko Canada to Canadian Natural. And I always thought of that company as the one who was going to turn out the lights in the Western Canadian Sedimentary Basin, and that they continue to exist. What is the aura around CNQ now versus where it was 10 years ago? And maybe I understand there's been a bear market, but in terms of operations and the shallow gas plus the SAGD plus the heavy oil plus the conventional, they're sort of everything. What's the perspective of that in the market?
They always have a reputation of being really hard to work with because they're so tough. But the reason they're so tough on themselves is because they're so efficient and so well run. They tend to do very counter-cyclical acquisitions. That's kind of what they're known for. So the downturn for them, because they have access to capital and they have cash flow and credit, they've been buying up everything they can get their hands on. Because I think their view is, long-term oil, the best carry trade is probably to own physical barrels, right? So right. It's okay, what weirdo European company doesn't want to own oil sands anymore? We'll take it off your hands at 3 times cash flow, no problem, right? So they I jokingly call them the garburator of the Western Canadian Sedimentary Basin, but they kind of are. They'll just buy, but they won't pay up. If you're going to them to buy something, it's going to be great. But no, they are, when I look at Canada, Canada's so small compared to the US. Canada has very few great, Canadian-built companies. Brookfield's probably one, a couple software companies, Shopify, and C&Q is an amazing Canadian company, and they've done an exceptional job. So it's probably Amazon. But they're going to be a huge winner, and I think when you look at C&Q, I feel like their break-even is now. It's in the 20s.
Right.
Operating. This is USTI. And even they didn't cut their dividends during COVID. And C&Q, even now, is still going to have free cash flow this year, which is amazing when you think about it.
That is amazing. Has their stock, I haven't actually looked at CNQ for a while. I've been noticing on Twitter there's a couple people who've been calling CNQ as their big purchase. Has their stock been materially outperforming everybody else in Canada, or does everyone just trade as a group?
It has, by outperforming, I mean it hasn't gone down as much.
It's only down 35% instead of 60%? Yeah.
Now, if you compare it to, Exxon, BP, Suncor, even Shell, C&Q's done exceptionally well, as they should. They have the lowest break-even costs. They have the most durable business model. They should be outperforming. So they have done well. One struggle in Canada we have is, our energy index is so heavily dominated by C&Q and Suncor that the institutional investors just tend, if they want energy weight, they only buy those two. So the rest of the sector is abandoned. That's a struggle that Canada and the US is going to have to work through in terms of getting, institutional investor apathy fixed. It's just how low the index weightings are for everything else.
Yeah, I was chatting with Paul Sankey, who was on the podcast about a month ago, and one of the things he was talking about was when you're only 2% or 1.5% of the whole U.S. index, and you miss 100% move in the stock, you're only going to lose like 75 basis points of performance, which, if you're just sitting in Amazon for 3 days, you're basically getting, because, today, with amid all the uncertainty, somehow if Biden won, it was good and the stock market was going up. If Trump won, it was good and the stock market was going up. And if no one won, there was tremendous uncertainty. They split the Senate, the stock market was going up. So like no one really cares about energy, and it's going to take a catalyst, unknown what that catalyst is, but it's going to take something to bring investors back in the space. What do you think that catalyst will be? And talking macro, what's your oil price and gas call for 2021?
I think TI is going to be pretty weak. Probably there's still some issues to work out with WTI.
Specifically Cushing or floating storage, or what do you think is the problem?
The market, it doesn't react to anything that would be perceived as supportive of oil prices anymore. So literally there can be no headwinds at all. So what's going to happen with the OPEC volumes? What's going on with Russia, Saudi Arabia, Libya, all these things? Everyone just hates energy so much that they're always going to look at those items as negatives. So things have to be massively positive before people are going to really move on TI. I think people want to see, I personally want to see what's going on with the decline rates in the US. It's been, obviously it's down, but it's kind of messy because there were shut-ins. So let's see how bad it's going to get in terms of where oil volumes land in the US. And I don't think we're going to get a clear picture on that until the spring.
See, and it's interesting because, those who follow it down here, everyone knows the base decline is 40%. And so of the 13 million barrels a day we produced, about 4.5 million was sort of like Gulf of Mexico, Alaska, California, conventional stuff. And the other 8.5 was all shale. And if you have a 40% base decline and no capital, you're going to decline 3 million barrels a day, which moves the U.S. to about 10 million barrels a day. So I do find it interesting that producers have, number one, picked up their frac crew at a much, much higher clip in Q4 to try and cover that decline. But then B, to your point, there's no catalyst that's holding oil prices up. So oil at 40, clearly guys were excited. Oil at 35 or 32 or 30 is going to be really, really punitive. So I agree. I think we're going to see how bad cash flows are going to look here very, very soon, because you won't be able to mask the declines. So do you think $35 oil for H1 TI is a reasonable call, or are you more bullish or bearish than that?
I'm probably a little bit more bullish. I probably think in the 40s is where it's going to be, but I can't see it going much higher than that. Call it in the first 6 months of the year. That seems unlikely to me, but the management teams, just on what you're saying about picking up frac crews, it's just a game, because they know that if they drill now and they add those wells, they're going to try to turn them on literally January 1st. And it's just to get their average to average production volume. It's just math. They want to bring them on early in the year.
Well, it's even worse in some places like the Bakken, where you don't even have export capacity. Guys are completing wells that were perfectly good ducks and then shutting in existing production to make space to ship it. So their net revenue is exactly the same, and yet they've spent capital that they didn't need to spend. So it's almost like they're setting up the Q4 press release that's like, well, we had 7,000 barrels a day shut in. So if you add that 7,000 to our 40,000 of flush production that we were restraining, we actually have no decline and everyone should love us. And it's amazing that management teams are still getting away with that. Do you see that in Canada?
Not really. That's just been beaten out of management teams. That is just not happening really anymore. A tiny bit, but not you always used to see the press releases in October and it'd be oh, we're accelerating next year's capital program into this year, which is just code for we're increasing our budget because we want to pump up our numbers.
Yeah.
In the US, I don't know. That's the type of stuff that the institutions need to say, we're not happy with this. Don't do that. It doesn't actually make any sense. You're spending capital, so your payout over that time period, because prices are low, your payout's going to take longer. So all you're doing is stretching your balance sheet for no benefit. There's just absolutely no reason financially to be doing that, and it doesn't make sense. And that's the behavior that needs to stop.
Where do you come on natural gas? Do you have a more constructive view of natural gas, early, late? There's some bulls.
I'm a huge bull, obviously. I think, speaking in Canada, we had a terrible natural gas market. It was very complicated. It had to do with some FT restrictions that were coming on from TransCanada. So that got fixed last fall. So we went from a situation where we would literally have negative gas prices at AECO repeatedly to a situation where like AECO is $3 now. So the natural gas guys, this is like the greatest thing that's ever happened to them in Canada, because it was so painful for so long. And finally now it's gotten better. And what the best part about it is, the worse oil gets, the better it is for natural gas, because you get all the associated gas shut-in. So, it's a great contrarian trade if you're negative on oil. Like, natural gas is going to benefit from oil price weakness. And we're at the price now in the US where we're maybe talking shut-ins, or at a minimum, no capital expansion. We get a normal winter, hopefully even normal. And like, we're off to the races in terms of natural gas thing. So I'm very constructive, to put it mildly, on the natural gas future.
So what do you say to a new grad who's coming out of the University of Alberta, who 4 years ago in 2016 said, you know what, looks like energy's coming back. We've just had a low, and in 4 years it's going to be great. And they're entering the job market right now. What advice are you giving to young people in the energy industry, or who want to be in the energy industry?
It's really hard. There's been a complete lack of brain drain of talent out of Calgary, both on the technical side and on, the finance side in terms of capital markets. And it is really challenging out there for new grads. I'm not going to say it's easy. There's just not a lot of net hiring, especially in the engineering and geology. I'd say to engineering new grads, if this is what you want to do, I think there's still a really big place for that. I do think that we are going to have a structural bull market at some point. And I think there's a room for engineering grads. Geology, I think, is challenged, not necessarily just because of the lack of capital, but also just because of the fact that we're moving to resource base, right?
Right.
Like, they're never going to need as many geologists as they did 20 years ago. It's just not going to happen. So in terms of new grads, you need to sharpen up your skills. Like, most of the engineering positions we hire at Birchcliff, they need to know how to use Python. They need to know how to use R, all the analytics that go along with it. So make sure, while you're in school and you're doing your petroleum engineering work, that you're also advancing those other skill sets that just make you more well-rounded.
That's good. I think that's great advice. Now, talk a little bit more about Birchcliff, because you're on the board, and obviously I don't want to dive into non-public information, but tell our listeners who might not be familiar with Canada about Birchcliff, the Birchcliff story, and maybe some technology that you think might come out of the company that helps enhance the development. If you see technology as a key vehicle to unlocking value.
So Birchcliff is effectively 100% Montney producer. We have kind of one contiguous property we call it Pouce-Coupe or Gordondale. So this would be pretty close to the Alberta-Saskatchewan border. And they've basically been drilling Montney wells, only Montney wells, since their existence. They've been around 15 years. Guidance for this year is about 80,000 BOEs a day, 25% liquids. And, they've been at it a long time. It's a great company. We own all of our own infrastructure, so we don't have to pay a lot of processing fees to other parties, which has been nice. It's a great team, and we've got our quarter coming out next week. But in terms of technology, because we have basically one play concept, we're able to try out a lot of different techniques. So we've done fiber optic wells where we'll leave fiber optic cables in, because we've got different layers of Montney zones. And obviously, when you have a big contiguous land base in different types of Montney, you want to make sure you're doing this effectively. Like, the wells aren't Velcro. We're not going to be able to move them later.
Right.
So, do we have the well spacing right? Do we have the frac program right? Are we completing these in the right order? Is this zone, interfering with this zone? So there's a lot of those refinements that have happened. And that's one of the silver linings of the downturn. I call it, idle engineers, right? When you have less capital to work with, you'd be surprised the things that they can improve. So, we've got our operating costs down to $3 a BOE. That's something that's been come out of the downturn is, everyone's really sharpened their pencils, and, the lower cash costs, those are the things that stay with you even in, a more robust market. Obviously there'll be a little bit of cost inflation, but, no, it's been great. They do a lot of data analytics in-house. We've got a very advanced, we've tied it into like our G&G work. So we can use AI on drilling locations and other things like that. But no, it's been, it's a definite shift to being on a board versus what I was doing before. I was an analyst. So as an analyst, you typically look at these companies from the outside in. You're looking at assets, maybe the executive team, and you're at most taking like a 2-year view. When you're on a board, for a resource company, you're making decisions that are going to impact the company decades from now, that are probably going to happen long beyond my tenure. Do you want to be involved in an LNG project? Well, if I decide that now, that's going to have an impact in 20 years, right?
Right.
So it's a big shift going from, the capital markets, even the institutional investing side, to actually being on a board. It's just a completely different mindset in terms of making decisions, because there's so much more long term.
Is there, generally speaking, and again, I won't be specific to Birchcliff, but from a team building and a board, because one of my complaints in the US, I always said it was not an E problem, it was not an S problem, it was a G problem. Yeah. And the G problem was that 4 days before a company goes bankrupt, the board decides to give the management a $15 million bonus because they're so important to the ongoing structure, even though the company has gone bankrupt under their watch. And then when the creditors ultimately take over the board, they then fire said management team and then give them severance. And I'm like, that is a US example, but I actually don't even blame the management team for that. I blame the board for that. How does the board and governance play, and how do you think that boards can become stronger given the interplay between management and the board, and that they don't typically want to put like a loudmouth on the board that will shut them down? How does that all work together?
The typical way of doing governance in the past, and they tell you this, is it's called noses in, hands out, meaning like a board member is supposed to be like kind of peering in, but ultimately the CEO works for the board. So you're getting all of your information from the CEO. So you have to trust that they're telling you the right things, they're being accurate, and they're just not trying to guide you into a certain decision. Now, I think there needs to be a shift in governance, and I think there has been to date, where board members need to take a more active role in making sure they're making their feelings known about certain issues. And I think that honestly the best way to do that is, you can't show up at a board meeting to bind a That's not appropriate governance. There needs to be consensus in boardrooms, but if you have an issue about, and I'm just making this up, capital budgeting, like you should go and hash it out with people. Like don't just talk about it for the 15-minute section of the meeting, right? Go hash it. If we're a Montney natural gas company, if they came to me and said, Stacy, we got this really great deal in, France that we want to do, I'd be like, absolutely no way. That's insane. Right. But you have to be on the same team, but they have to know that you're going to speak out. And, I'm very fortunate I'm on a board that's got a very open dialogue. Like if I want to talk to any employee, I can call them at any time. I don't need to go through the CEO. So you just have to have that level of comfort that, the door's always open. You can talk to whoever you want. There's no secrets. And, I think ultimately everyone wants the company to do well. They just may have a different way of looking at it. But, right. When I got added to the Birchcliff board, I think I was 35. Like I'm a millennial female. I have a different way of looking at the world than we call them PMS boards in Canada, which is pale, male, and stale. I have a different way of looking at the world than, other, I don't say geriatric board members, but it's different.
Yeah. So with that in mind, if you were to go back to young Stacy, 23-year-old Stacy, and give her some advice, knowing what you know now, as she was embarking on her career, what is the biggest lesson that you would tell yourself today that would positively impact your career, had you known it then?
You know, I still think, and I probably did this, so I'm giving myself the same advice, but I don't think you can really underestimate the impact of hard work and just like being nice to people. I know that sounds absolutely insane, but you know, when you're an analyst, like your calls are public and a lot of them are wrong. Like you just want to be right like 51% of the time, basically. And if people think you're lazy or you don't work hard or you don't care about the quality of your work, they're not going to cut you any slack when you mess up. So no matter what kind of the business you're in, like if you work hard and, you know, you make a mistake or you piss someone off, people are going to cut you a lot of slack if they know that you're generally a pretty hard worker and you care hard. So I don't have any like super profound advice. You know, just, you know, be nice to people you work with, work really hard. You know, you got to be really forward, with your career. Like, you know, this is one thing, especially with women, is they need to be more outspoken and advocate for themselves, especially if they want promotions. And I always tell, like I do a lot of work with women's group and capital markets and in energy. I always tell women, like, you know, if you're middle management and you want a shot, maybe there isn't a chance for a promotion, but go talk to your boss. You tell him, like, I'm going to do whatever it takes to get promoted. And I want you to know that I'm here and I want this. And maybe there's not a position now, but maybe 6 months from now when someone leaves, you've already planted that seed that you want that job and they'll think of you. So, you know, be aggressive, be assertive, be your own advocate. And that goes for men too, but really for women, you know, for trying to advance their careers, you just have to be your own advocate.
So did you ever read the book by Sheryl Sandberg, Lean In?
I didn't.
So it was very controversial when she released it. She was obviously CEO of Facebook at the time. And the concept was that women in the workforce hadn't leaned in on opportunities. And the politically incorrect thing that I remember from the book was she sort of said, you know, you get to a stage where you're going to have a family, and women would be leaning out for the promotions and not talking to the boss, and so they might have wasted 2 or 3 years of their career waiting for the family, and then by the time they come back in, their male counterparts who have been, you know, I'm going to take care of the family and get promoted, have leaned in really hard during those times. And that sounds similar to the advice that you're giving, which is like, advocate for yourself and aggressively pursue opportunities. Do you agree with the paraphrasing of what Sheryl said, or is there some nuance there?
I think in her situation, part of it is like everyone has their own family dynamic. So it's easy, and it was easy for me too, because I had a husband who was really supportive and who's basically the dad, like the stay-at-home dad, the primary caregiver. So I had a different equation than some other women. So I don't want to apply my situation to everyone's, but I remember when I wanted to get promoted, you know, people are going to, from my old firm are going to watch this to figure out what I did, but, you know, I got on a plane and I went to Toronto to meet my head of research, and I was 25, and I said, listen, I know you're going to pick an analyst, whoever's going to be next, and I will do whatever it takes to make sure it's me and not those other 4 people that I work with. And you know,
I absolutely love that.
And he was like, hey, that's crazy, but maybe one day. And like within 6 months, someone quit and there was an opening, and I had already worked really hard at it. But I put off having kids too, right? So it's, you know, the world's not fair. You have to make these adjustments and you got to do what's best for your family. And I was able to push really hard early in my career at a young age, because I knew if I kind of reached the level I wanted to get to later in my career, having kids wouldn't hurt me. It's sad that I have to say that, but that's what I did.
But again, I love that because you accepted that there was a trade-off and a meritocracy. And instead of you saying, boy, life is unfair, I want to have kids now, and I understand the burden will be on me now, and I want to get promoted, you made a choice. We can debate whether you should have had to and all these other things, but I love that. How did you downplay the feedback I hear from some women is they come across as bossy, right? And my sister-in-law, I believe it was my sister-in-law, but I'm going to give her credit for this, said that no, she has I have two nieces, and she said, no boy has ever been told as he's growing up, you're too bossy. Stop being bossy of your friends. They're like being assertive and aggressive is like sort of welcomed. Whereas for younger girls, that was a character trait that was identified. How were you able to balance the nuance between an assertive man and a bossy woman are sometimes perceived differently in the workforce?
Yeah, it's a stereotype, and I'd rather be bossy than meek. And for me, especially being an analyst, like you're making calls on stocks. If they think that you're weak or you're not confident, no one's going to listen to you. So part of my job description was having that level of confidence. And if people said I was, bossy or bitchy or whatever, then that's better than being like weak and feeble. So yeah, it's not fair, but that's just the only way that would have worked, right?
And how did you deal with? Because that seems like a very self-aware. And again, I was speaking from a male perspective, but the things I've heard, and you characterize it as a stereotype. You must have really high self-awareness to have identified, I'm going to get on a plane, I'm going to go to Toronto, I want to do this, I have my career, I'm going to make the trade-offs that I need. Was that a self-awareness thing? Is it a confidence thing from being a kid? Is it a mentor thing from where you started in industry? What do you think was the key thing that unlocked that ability in you that maybe someone listening says, how could I go about doing that?
I think it's a confidence thing, and I also think it's having people around you that will back you up. And for me, I was really fortunate in my career, and I've said this to women, there's mentors and sponsors. What I try to do is, working in an investment bank, there's always guys that are really loud, like the loudest guys. They may not be the ones in charge, but they're the ones that are always have the attention of the room. And the way I would say is like the loud guys, they may not be the ones that decide to you, but they're the ones that are going to be talking about how great you are to everyone. So I was really fortunate to have some very loud people at GMP that had my back and that were really supportive of my career. And I didn't really do anything special. They just knew I worked hard and they were great guys. And I was really fortunate. Our CEO, his name's Harris Fricker, he was really supportive of my career. Our head of sales was really supportive. And, when you're 25 years old, getting an institutional sales guy to put you on the phone with one of their big clients, like they got to take a chance on you, right? You're unknown. So that ties back to the whole thing about working hard that I talked about, right?
And having good relationships, which you also talked about.
Being a woman is really hard. And my view on it is, 80% of the guys that work either in the energy business or in finance are good guys, but they kind of don't want to get involved in any of the messy stuff, whether it's either supporting women or when they see women being mistreated. They're good guys, but they're quiet and they just kind of want to mind their own business. 10% of them are amazing guys or like champions for women, will do whatever they can. They're the guys that are on the women's committee and mentoring women. And then there's 10% that are like huge assholes that, are not supportive of advancing women. And you just need to keep a handle on who's who. And, what I want to see happen in the energy industry is those 80% of guys that are quiet, I want to see them be more active and see the benefit in, supporting women inside of energy companies or in finance. Because when I look at the energy business, when I look at the finance business, it's the assets, but it's also the people. And if you're running a company and you are not able to access 50% of the talent pool, which are women, you are doing a huge disservice to your business. So you need to think about how you can make your company better. You need to actually try to get headcount up in women because they're out there. I know people say it's like a meritocracy, but you just need to look a little bit harder.
I love it. That is phenomenal advice, and I think it's a great place to leave it. And how can people follow you, like in terms of get in touch with you, like with emails or something? If someone wants mentorship, is there a website or just sort of what's the best way to get hold of you?
I'm sure you can find me on LinkedIn. It's Stacy McDonald. I'm on the board of Birchcliff, and I get a lot of DMs on there. But as long as you're not, as long as you're polite and not trying to sell me something, I'll generally respond. So.
I love it. Well, thank you so much for joining us this week. Until next time, be safe, be good, have a great day.